Alrighty, in this video, I'm going to be talking about what is a premium and what is a discount market. Okay, so before we start this video, I want to give a shout out, like I always do, show my respect to ICT. This is a concept that I got from his content. Okay, so if you want a 100% full understanding after you watch this video, go check out his channel. I will leave a link to that in the video description. So again, make sure you check out ICT's channel because this is the individual who pioneered these concepts. So you most definitely need to check out his content as well. So yeah, that's in the video description. All right, so like I just said, this video is going to be going over premium and discount. This is a very important concept. It's a concept that I use all the time in my trading. It was a very big piece of the puzzle for me for taking my trading to that next level that I needed it to go. And I think for you guys that aren't privy to this concept yet, that you're new to it, you're not sure how, or you're not sure what it is, if you stick around to the end of this video, I think you're gonna get a lot of use out of this. I think it could be that missing piece of the puzzle for you that's gonna connect a lot of dots. So yeah, let's jump right into it. So we're looking at a chart of Euro USD right now. This is the date of 11/19, or the date I'm on currently right now is 11/19/2022. So Euro USD. Well, first things first, let's establish what a premium and a discount is. Okay, so what does that mean exactly? What does a premium even mean? Well, puts in the most simple way that I can, a premium simply means expensive. Okay, so write that down, take note on it, remember it. Premium means expensive. Discount means cheap. So again, premium equals expensive. Discount equals cheap. Okay? So we're looking at a chart of Euro USD right here. This is a weekly time frame. Right now, we can see it clearly. It's been bearish, it's been bearish, it's been bearish, consistently making lower highs and trending lower consistently. Now we can see recently though, right here, see this swing high? So we came up, boom, we purged that swing high, and then we pulled back, and then boom, we get another nice move up, and now we're kind of playing around right here. So we did have a shift in structure on Euro USD. So actually, this is currently on the weekly time frame. It is operating within a bullish market structure at the moment. Now you might be thinking, well, whoa, hold up. I thought we're learning about premium and discount. Why are you going into market structure? It connects with this, and it's going to help you understand the concept a lot better. It all comes together. Okay. So right now, Euro USD is operating within a weekly market structure, but big but here, it's in a weekly market structure that is bullish, but it is in a premium market. So remember what I just said. Premium means what? A premium means expensive. It means it's expensive, but we have just also established that the market structure is bullish currently. So market structure bullish, premium market. So you might be thinking, hey, I'm interested in buying, or maybe you're interested in shorting. So here's what you need to understand. Whenever price enters a premium, it enters a premium whenever the most simple way to go about. So there's actually several ways to, it's not just one way to determine if it's traded into a premium. There's actually several ways to do it. But in this video, I'm going to give you the most simple way, and that is taking out an old high. So as soon as actually we took out this high right here, see that? Boom. As soon as it did that, it entered a premium market. Okay. And then we took out this high, and then we took out this high. So what's resting above each of these highs? What is resting above swing high levels? Buy stops, buy side liquidity. When we take out that buy side liquidity, when we take out those buy stops out of the marketplace, we take out those highs, price is in a premium market. Now, the structure right now is actually bullish, but it's expensive because it's taking out these highs. See how it took out that high, took out that high, took out that high. It's in a premium market. It's expensive, okay? Now, you might be thinking, well, when does it enter a discount, Mike? When does it get cheap again? to determine that, we got to take the most recent price range. See this swing low right here, lowest low in the middle, two higher lows on the left, and a higher low on the right there. So two higher lows on the left and the right, that makes it a swing low. This is your established price range right here. You're going to take this low to that high, and you're going to find 50% equilibrium price point. So I'm just going to plot it on here real quick, and boom, right there. There's 50% of that price range. So I just took a Fibonacci. All I did was take a Fibonacci from the low to the high after purging those swing high levels. And I found 50% equilibrium of this established price range. There's equilibrium. Anything above that is a premium. Anything above that is expensive on the weekly chart. Remember, we're on a weekly chart here, okay? Anything below that is a what? Is a discount. So you can see we got like this swing high right here. This could serve as support. It's in a discount market. And that's when a lot of your resistance turn support concepts, they work perfectly, or not perfectly, but they work really well. But not to get too sidetracked, I want to stay focused on premium and discount. So we're in a premium market, and we would remain in a premium market until we traded below 50% equilibrium of that established price range. So again, remember, structure is bullish, but we are in a premium. Structure is bullish, and we're in a premium. And I'm also going to leave a link in the video description over one of the most recent videos I made regarding market structure. Because if anybody that's watching this is confused when I say bullish market structure, I'm going to leave so go to the video description after you watch this video. In the video description, you will see a link with text beside it that says the only video you ever need in regards to market structure. Okay, that's the only video you need for market structure. Okay, that'll clear up whenever I say that this is operating within a bullish market structure. You watch that video, it'll clear it up. Okay, so bullish market structure right now, but it's expensive. Okay, bullish, but it's expensive. It took out this high. It took out this high. So what's it probably going to want to do pretty soon here, since it's expensive? It's probably going to want to retrace back within this price range. Okay, it's in a premium. It's probably going to want to retrace somewhere in this area. Does it have to? No, nothing is 100% in the market, but chances are, more likely than not, it's going to want to trade to a discount. It's going to, because it's expensive right now. It's going to want to trade into a discount market. It's expensive. It wants to pull back. Okay. So I think we're going to probably pretty soon, I could be wrong, we're probably going to want to pull back into a discount. So again, what is a premium? Premium is when it takes out an old high. Took out this high right here, premium. Took out this high, premium. Took out this high, premium. So it can trade into a premium and keep trading higher. Okay, just because it's in a premium doesn't mean it can get, it's not just going to stop getting more expensive. It can trade into a premium like it did here, and it can take out another high. It could take out another high. Okay, so it can keep getting more expensive. But for my trading and what I do, I don't buy strength. Okay, I'm perfectly fine with missing price as it's ripping up. So say if I'm looking for a short play, I'm not gonna short strength. I'm gonna look for it to, obviously I'm gonna look for my confirmation, which I'm not gonna get too deep into all that in this video, but, or my mistake, I think I said the opposite a second ago. I'm not gonna want to buy price if it's in a premium. Okay, if it's in a premium, I'm only looking to short. If it's in a discount, I'm only looking to buy. All right, so as soon as we took out this high, premium. All right, I think we about covered that. And what you need to understand is price is fractal. Okay, what do I mean by that? Well, what about the daily? Where would the daily be entering a daily discount? Because it's actually, the daily is in a premium right now as well. This line right here is that weekly that we were talking about. There's that weekly price range. There's 50% of the weekly chart. Okay, but what about the daily? Where would it enter a daily discount? Well, it's the same exact process. See right here, see this low? This is that swing low level right here, right before you had that really large leg up higher, this really explosive move to the upside. See this price range right here on the daily chart? You're going to take the low right there to the absolute high of that price range, and you're going to find 50% of that price range. Anything above 50% is expensive. Okay, anything above 50% is what we consider expensive, because anything above 50% is a premium marketplace. Anything below 50% is a discount, meaning it's cheap. So you can see right now price is above 50% equilibrium. Price came up, it took out these highs, cleaned out all that buy side liquidity. It's really overextended right now. It is in a premium market. It's expensive on the daily, okay? So there's 50% of that price range. And so once you get down into that area, you get down in this area, that area, it's at that point, you want to be very, very careful with your sales, because it's cheap on the daily at that point. It's below 50% of that price range. That's a discount market, okay? And it's the same thing if you flip it around. So we're talking about taking out these highs right here, but the same thing whenever you take out a low. So say price came down, it sold off hard, and then it took out this low. So let me just remove these lines real quick. So say price, I want you to just imagine for a second. I want you to imagine price comes down and it just, boom, comes down, takes out this low. Say it takes out this low, it takes out these lows right here. At that point, that would be a discount, because it took out a swing low level. It took out that sell side liquidity. So resting above swing high levels, we got what? We got buy stops. Resting underneath swing low levels, we got sell stops, sell side liquidity. Once it takes that sell side out of the marketplace, it is now entered a, or if it did it right here on the daily chart, that would be a daily discount, okay? Again, can it keep going lower? Sure, it could come down, then attack these lows right here without pulling back, without having any pullback whatsoever. That is possible. Okay, we're dealing with the market here. We're dealing with trading. Anything can happen in the market. We all know this. But it's probably going to want to pull back after it takes out those lows. It's going to want to pull back. So, and where's it probably going to pull back to? A premium market. Because after it takes out those lows right there, if it was to sell off and take out these lows right here, it would want to do what? It would want to likely pull back up into a premium, because then at that point you got a new price range. So I'm going to pull up a different chart, or not a different chart, but a little bit of a different example here. So let's take this past price action. So let's zoom out a bit. So right here, you see how Euro USD was just consistently grinding lower? We can all see consistent downtrend, bearish structure in here. We can all see that, correct? Now here is, because here's another example. Did it enter a premium right here? It absolutely did. So here is a price range. So you got your high right here. If you look at my cursor, see how I took this price range right here to the high, to the low. There is a price range. Where is 50% of that price range? Right there. Now in this example, the structure is bearish and it's expensive. That's the best. Those are the best plays. Those are the money makers going with the trend like that. Those are the easiest plays, the easiest money makers, when you got the structure, when you're trading in the direction of the structure, but also it's expensive. It's in a premium marketplace. Those are the low hanging fruits. Okay. So if you want to wait for the best plays, it's best if you have everything in conjunction, meaning you're trading with the structure, and, or like we got here, it traded up into a premium market. So it traded above 50%. It's expensive. So again, that price range, because I mean, it's bearish right here. You see how price is just trading lower. It's trading lower. It's trading lower. But I don't want to chase that. I don't want to chase that move down. I want to wait for a pullback. Okay. Why do we want to wait for a pullback? Because, well, our risk reward is better with that. Okay. So I don't want to just keep chasing these lows down here. You can, and people can do that successfully. Tons of traders, they successfully trade that momentum like that. That's not me. That's not what I do. Okay. I want to wait for a pullback. I want to wait for it to pull back into a premium. I want to wait for it to be expensive. Okay. And we wait for that. It becomes expensive once it trades above 50% of that price range. Okay. So boom, it trades above it. When does it enter a discount? It enters a discount once it gets below 50%. Okay. Well, so really you want to try to get your entry above 50%, but really once it takes out that low, that's when you really need to start looking for the door once it takes out that low right there. But yeah, that is Euro USD. You know what? Let's pull up one more example, one more chart here. All right, so I just put up something random, AUD CAD. So like I said, price is fractal, and what you need to understand is premium and discount occurs on every time frame. So you could be in a premium market on one time frame, but a discount on another. So for example here, you can see like the daily chart on AUD CAD. See how this is in a premium? So you could be in a premium on the daily chart. Like this is just ripping up, taking out these highs, taking out these highs. So it's a little bit expensive right here. So it's in a premium on the daily, but then you could go to something like the 15-minute and it takes out these lows right here. So now it's in a short-term discount. So keep that in mind as well. Price is fractal, and your best plays. So why do I say this? Your best plays are when you have everything in conjunction with your established trading time frames. So, you know, you might have 3 time frames, maybe a weekly, daily, 4-hour, or a 1-hour, 15-minute, 5-minute. It's always best if you have everything in conjunction. Those are your lowest hanging fruits, your easiest trades. But basically what I'm getting at is you want to know where you are on every time frame. You need to ask yourself, am I in a premium or am I in a discount? Ask yourself those questions, okay? Because here's another example of, so right here, price was coming up, it was coming up, it was coming up, it takes out this high right here. It's in what? It's in a premium. What happens? Boom, as soon as it sells off, takes out these lows, takes out these lows, takes out these lows, it's in a discount. It's in a discount, it's cheap, but it keeps getting cheaper. Like I said earlier, just because it's in a discount doesn't mean it needs to turn around right now, okay? And you don't need it to. That's why you utilize multiple time frames to look for that confirmation. Again, I'm not gonna get too deep in this video. I'm just trying to go over premium and discount here. But it's in a discount on the 15-minute right here. When does it enter a premium? Well, you're gonna take this high and you're going to take the low. That's a price range. So it was in a premium, pull back into a discount. So you could look for buys in here if you're a scalper, utilizing different time frames. Remember, looking for that confirmation and take it up into a what? Into a premium market. Where's a premium? Above 50% equilibrium right there. So it takes out those lows, it pulls up above 50%, hits OTE, and then what happens? It sells back off lower and attacks those lows. So yep, that's the gist of using, obviously, like I said earlier in the video, there's different ways to measure, because it's not just 50% equilibrium, but that is the number one way that I use in my own trading is using the stat. You take your price range, you find equilibrium. Above it, above 50% is a premium, below it is a discount. That's the easiest clean cut way to establish premium and discount. Okay, if this video is still a little bit unclear, go back and watch it a couple times. I'm telling you, if you watch it a couple times, you go into your own charts, you pull up your own charts, you draw out these price ranges, you look at multiple time frames, it'll start to click, it'll start to make sense. And again, I'll link a few videos in the description. Make sure you check out ICT's channel. Make sure you check out my video on market structure. You do all of this, and you watch all those videos, it'll start to click, start to make sense. All right. So hopefully you found this video useful. If you did, leave a like, subscribe to the channel, and yep, I'll see y'all later.